Hello, everybody. Welcome back to the channel. I am here today with a very special guest, Matt Hougan, the Chief Investment Officer at Bitwise. They've got almost $2 billion. Somehow they convinced the world to give them $2 billion to allocate to their Bitcoin ETF. Matt, thank you for being here.
Thanks for having me. Really excited to be here.
So this is an exciting interview because not only do we want to get to know more about you, how you think philosophically about Bitcoin, Bitwise itself, but Ethereum just had their spot Ethereum ETFs approved by the SEC. A lot of interesting reasons for why that might have happened today. And I believe you guys are offering a Bitwise version of that spot ETH ETF. So lots to talk about and get into.
Yeah, thanks.
All right. So first question I want to start off with is if we look at your LinkedIn, you were the CEO of ETF.com.
That's right.
Which makes a lot of sense that you're the CIO of one of the world's largest ETFs right now. How can you give us a little bit of a background on how you got into the world of ETFs and what did it mean for you to be the CEO of ETF.com?
Sure. Yeah. Here's a funny little thing about ETFs. Today, we think of ETFs as like the mother's milk of investing. Everyone loves them. They're totally mainstream. They're the most blue chip way to invest in everything from stocks to bonds to now Bitcoin. But in the early days of ETFs, actually, Wall Street hated them. ETFs were this renegade disruptive technology that promised to make things cheaper, make things more tax efficient, make things more fair. To put this in context, because I know it's hard to believe, the Financial Times called ETFs weapons of mass destruction. Congress held hearings about ETFs destroying American entrepreneurialism. And so I was early to use ETFs in a former job, and I saw how powerful they could be. And I thought to myself, there's a lot of career alpha in getting involved in something that has disruptive potential, the potential to change finance, but which the world doesn't see. And so with a few friends, grew this company ETF.com to be the first media site covering it, the largest data provider, the largest conference provider, and grew that for 15 years and broke a lot of ground in the ETF space. And then, ended up selling that business and looking around for another disruptive technology that the world didn't like, that the world didn't understand, but could make the world a lot better, and that I thought would grow substantially. And that's what brought me into Bitcoin and into crypto. So that's the tie in there.
Okay, so I'm a little confused when you say Financial Times called it weapons of mass destruction, because the S&P 500, the Dow Jones, these have been around for a while. So why do you think the mainstream media, financial media, was doubtful of ETFs?
Yeah, well, it was a new thing, right? And it was different. So what had been around for a long time is mutual funds that trade once per day, tracking the S&P 500. ETFs took that and said, we should trade these throughout the trading day, which I know is only 9:30 to 4, which seems ridiculous. But at that point, it was a massive breakthrough. And the Financial Times worried about taking things that don't trade all the time and allowing them to trade all the time. They sensed some sort of risk, specifically with bonds, which don't trade very much at all. And then ETFs made them very liquid. But almost every disruptive technology, almost every new idea is met with significant resistance. ETFs were a new idea, and sort of we grew our business as they grew. Today, they have $10 trillion. But at the time we started covering them, they were about $100 billion market. So really grew a lot.
Okay, so last question on your role at ETFs.com. I'm really interested in this because essentially at its core, I think you would say it's a media company that you built. And I'm, building a media personality, media brand. What was it like back then? I think you didn't have all of the sort of social media, amplification that we have today to build a media company. And I guess, what did you learn about what it means to get an idea out there into the world?
Yeah, we really anchored on doing differentiated analysis. So we didn't have the same reach that people have today through social. Now you can be a standalone media company and really compete with, the big boys in the space. That was more difficult back then. But if you were covering a niche area and you had niche expertise, you could really build a reputation rapidly. If you broke big news. So we broke a bunch of big stories. We wrote a huge story about a BlackRock ETF that wasn't doing a good job tracking its index, led to significant changes at BlackRock, eventually, moved many billions of dollars. And we just stacked these stories one on top of another. We had some of the smartest ETF analysts in the world at the time. And I think what I learned is when you're an outsider consuming mainstream media, you assume that it's more or less accurate. At least that's what I used to assume.
Yep.
But when you become a real expert in something, you start to see how the coverage of that misses so much. And what I found is there's a lot of space to be built underneath that as a media company. And then we expanded into data and conferences as well.
And what was it, primarily an email list or traffic to the website that you got?
It was both. I think our website, maybe had more of the data, more of the traffic. We also had some data tools on there. Because mainstream data platforms, Morningstar, Bloomberg, didn't cover ETFs, which is amazing. So we were able to carve out there.
And ETFs have evolved so much. I mean, even on the Market Open show that I did today, we were talking about SMH, which is a semis ETF. And people were saying, hey, I don't want to buy NVIDIA, but I want to get exposure to NVIDIA. What's a way to do that? And you've got these things that have the NVDL. It's a 2x leveraged NVIDIA ETF that has $4 billion under management. So it's just incredible how it's evolved over the past 20 years.
Yeah, it's a really fun space to cover because it encourages you to think about everything in the world, right? I thought about US stocks and Japanese stocks. I thought about currency differentials. I thought about commodity markets. I read deeply in gold. I read deeply in oil. I thought about leverage. I thought about path dependency. It's like, ETFs are the way to view how the world is valuing different areas of the market. You mentioned, semis. There are also AI ETFs and levered AI ETFs. And so I think they're a fantastic way to understand what's going on in the world. I still look at heat maps of ETFs to understand how the market is developing.
Okay, so you did all that reading for a good 15 years. The inevitable conclusion was you were going to move on from media into managing some real serious money, almost $2 billion at Bitwise. First of all, congrats. That's a fucking hard thing to do. Like, that's not easy that you're doing that right now. And it's absolutely incredible. Let's start the conversation here. Why Bitcoin to build an ETF around?
Yeah, I mean, there are two reasons for that, really. The first is, at the time, it was the only one the SEC would allow. And the reason for that is twofold. One, it's the most established, has the most robust ecosystem around it, has regulated futures around it. And the other is it's obviously the most decentralized with the fairest start point, and therefore it's clearly on the side of being a commodity and not a security.
Right.
And so the SEC would allow us to do that. It's also the most important crypto asset, right? It's the largest crypto asset. It's going after the largest addressable market. It's the one investors want exposure to. So both because we could and because we wanted to, it became the first one that we launched. And it's always going to be at the center of, I think, most crypto investors' portfolios.
Okay, so when did you personally get excited about Bitcoin, and what was the genesis of the idea for Bitwise taking advantage of Bitcoin and the potential to make it an ETF?
Oh man, I had two sort of seminal early moments with Bitcoin. The first was when Bitcoin crossed $1.
Wait, so you've been covering it since then. You've really been in the space.
I had it on my radar since then. We had 8 analysts, including Spencer Bogart, who was the first Wall Street analyst covering Bitcoin. He used to work for me at ETF.com.
He's a legend.
He's a legend, and he hosted a meeting the day we crossed $1. Bitcoin crossed $1. We discussed it for an hour. That was my first encounter. And then shortly thereafter, the original lawyer for the Winklevoss ETF application, which was in 2013, was a friend of mine named Kathleen Moriarty. And I invited the Winklevoss down to our conference to speak because it was an ETF story. And I sort of didn't treat it that seriously. And she took me aside and said, Matt, this is much more serious than you think. And that was a real shock moment because she was an absolute legend too. She was the lawyer on the very first ETF. And she was one of the most respected names in finance. And she said, this is something you need to pay attention to. So I had my eyes closely on Bitcoin and crypto since arguably like 2011, but really 2013 or so. And then once I sold the business, got connected with the founders of Bitwise, Hunter and Hong, was enormously impressed, loved what they were building, and took one day off and then joined their team.
What year was that?
That was in 2018. So I became involved in Bitwise as an investor in 2017, and then joined in 2018. I had to do a 2-year earnout after I sold ETF.com. So I had to wait for that to be over.
Okay, so when Bitcoin crossed $1 around 2013, 2012, were you actually dabbling in it a little bit and buying some, or no?
So bad. No, of course not. I had this meeting and I thought this is kind of interesting. I should buy some. And then I had another meeting, and then like I had to pick up my kid or something. And there goes the billions of dollars. No, absolutely not. First started dabbling in it, in the sort of 2015, 2016 era.
Got it. Okay, so let's do a thought experiment here. I am an institutional money manager with 40 billion under management. I say, hey, Matt, come to my office in New York. I want to talk to you. I might want to buy Bitwise. How, and by the way, I don't care about Bitcoin. I don't give a shit about Bitcoin. I just want to make some money. I really don't care about the philosophical. I just want your ETF to go up in value. How do you approach that conversation? How would you get me to even think about the concept of Bitcoin as an ETF for me to allocate 0.01% of my funds?
Yeah, I think there are two ways that I could tackle it. One is just to strip the name Bitcoin off it and look at it as an asset. If this was a no-name asset, you would look at an asset that has high historical returns, no correlation to anything else, is liquid 24/7, 365, and has volatility. What traditional sort of capital markets theory would tell you is that an asset that has high returns, high volatility, and no correlation is like manna from heaven.
Yeah.
You want to put that asset in your portfolio and rebalance, and it will boost your risk-adjusted returns. And sure enough, that's what history tells you has happened. So I might well take that approach. The other approach I take, the big challenge that a lot of institutional investors have is Bitcoin doesn't have cash flow. How can it have value?
Correct.
And the answer I have there is really pretty simple. It's like, look, Bitcoin provides a service. The service it provides is the ability to store wealth without relying on a bank or a government. You may not want that service, but hundreds of millions of people apparently do all around the world.
Right.
The reason it has value is if more people want that service, the only way you can access it is by buying Bitcoin. You can't pay a monthly subscription fee. You have to buy the asset. If more people want the service, the price will go up. If fewer people want the service, the price will go down. And I find that helps institutions because what they're really worried about is, isn't this just a game of musical chairs? And what if no one wants to own it at the end?
As in, what if it's greater fool theory, right?
Right. But this is the same as, think of any company. Like, think of a company that sells widgets. What happens to the value of that company if no one wants the service it provides? What's the value of Uber if no one wants to take an Uber ride?
Right.
It's zero. Bitcoin provides a service. If no one wants that service, if no one wants to store wealth without relying on a government or a bank, then yeah, the value of Bitcoin is zero. But there's every indication around the world. There are generational trends, there's deficits, there's inflation. Every indication you look at says the demand for that service is rising. And I think that's a pretty powerful story, and it seems to resonate.
Have you had meetings like the ones you just described that have ultimately turned successful to get funding?
Absolutely. Yeah. I mean, Bitwise today serves something like 4,000 professional investors, from RIAs to family offices to corporations and institutions. And most of those people have gone on a journey from, I just want to learn about this and I'm skeptical, to I want to allocate a little bit, to I want to allocate more. That journey can take a year,
right,
take 2 years. There are people I met with 4 years ago who are just allocating now. But absolutely, you can walk people through these questions. The big challenge is getting them to open their mind and actually approach this space with an open mind. If they do that, then yeah, you absolutely can win.
Do you think that's a process of being orange pilled, or a process of just thinking differently? Like, do you think the people, once they finally invest, they get it, or it's more so just an allocation for them?
I think about 2/3 of them get it. 1/3, it's an allocation, and that's fine. Like, there are plenty of people who invest in semiconductors who couldn't tell you how a semiconductor plant is designed.
Yeah.
Right. I don't even know how electricity works, but I use it every day. So I think it's fine if they don't understand. But I think a lot of them do get orange pilled. Look, we call it orange pilling. Another way to talk about it is many traditional investors have anchoring bias. They first encountered Bitcoin from Silk Road. They first encountered Bitcoin from a negative media story. And so they're anchored on the idea that Bitcoin is this crazy, terrible thing. Orange pilling is just really getting them to drop that anchoring and evaluate it for what it is. because if you look at the data, if you look at the capabilities, it's an incredible technology.
Bitcoin versus gold. Obviously, you're a bit biased, but what is the bull case for Bitcoin over gold?
Well, Bitcoin is as good at gold or better on every characteristics except for age. And age and nostalgia is important, and gold's track record is valid. But, Bitcoin has never been faked. You can send it anywhere around the world. It's infinitely divisible. It has more use cases and utility than gold. You could use it as a tool for international payments. You mentioned that our Bitcoin ETF has a couple $1 billion of Bitcoin. If that were gold, it weighs something like 10,000 pounds. I have to move it around through an airplane. If I wanted to send it to London, it would take a day at best and forklifts.
No.
Whereas I could move my Bitcoin there, in the next 10 minutes, the next hour, if you wanted to, have permanent settlement. So it's just better. The other major argument for it is that gold is a $17 trillion asset. Bitcoin's less than $2 trillion.
Yeah.
Gold could get you incremental returns. Bitcoin could get you exponential returns. And I think for many investors, that's more attractive.
So for the people that say gold is tangible, I can touch it, I can feel it. Bitcoin is, digital gold, maybe. Your argument is it's less about just the transactional nature of what you can do in terms of sending money, but it is that core store of value argument that you believe has just been exponentially better than gold over time.
Exponentially better, right? If you look at since COVID, the US dollar has lost 25% of its value. Bitcoin's up 800%. I'd add that from a portfolio perspective, if you have a portfolio of stocks and bonds and you want to hedge against inflation, adding a little bit of gold doesn't actually do much, right? Gold itself keeps up with inflation.
Correct.
It means the gold portion will be hedged against inflation, but the other 95% of your portfolio is still completely exposed. You need this sort of exponential return of Bitcoin in order to get it. For what it's worth, we had it in gold not that long ago. In the 1970s, we went off the gold standard. The world didn't know what gold was. As it figured out what gold was, the price went up 1,300%.
Right.
I think the same thing is happening with Bitcoin. As the world figures out what Bitcoin is, the price is growing substantially. I think in 10 or 20 years, Bitcoin will be boring too.
In the context of inflation, now obviously we've seen some pretty decent inflation. It was reported at 10% June of 2022, probably was a bit higher than that. Right now, headline 3.5 on the CPI. I've seen many arguments around Bitcoin being a hedge against inflation, but every time I've seen a higher inflation print or a bad core PCE reading, the NASDAQ falls and Bitcoin falls with it. Mm-hmm. What is the relationship between Bitcoin as a hedge against inflation versus additional liquidity that is needed, which requires quantitative easing, which means we need maybe more inflation for Bitcoin to do better? How do you think of Bitcoin and inflation in general?
Yeah, I think on a short-term basis, it's not correlated with inflationary prints, which is what we should expect. But I think on a long-term basis, it's providing a solid hedge against inflation. The way I look at it, if you look at COVID, from the start of COVID, Bitcoin ripped upwards from $3,000 to $66,000, and it peaked in November of 2021. Now, a lot of people say it didn't hedge inflation because the highest inflationary prints came in 2022.
Right.
But 2021, specifically November 2021, almost literally the day Bitcoin peaked, was when the Fed came out with its minutes saying that inflation wasn't transitory.
Right.
So I think what Bitcoin was doing was it was hedging against emergent inflation. And once the Fed got its sort of hands around this inflation, you saw Bitcoin pull back. You have to look at this over long periods of time. Over any meaningful period of time, Bitcoin has obviously done a fantastic job because it's the best performing asset in the world. But it's not going to hedge your day-to-day inflation prints. If inflation is 4% tomorrow versus 3% tomorrow, I don't think Bitcoin's going to care.
In terms of geopolitical risks, do you think it's a hedge against that as well?
You know, what I really think there is that over the long term, Bitcoin is going to thrive if we move into a multipolar world where you have different countries politicizing their currencies and the world wants an apolitical alternative.
Right.
Do I think, Bitcoin hedges, the situation in Ukraine getting worse? Not really, unless it plays into this evolution of a multipolar world. So I pay much more attention to the fact that now 30% of oil trades are not done on dollar terms than I do on specific geopolitical conflicts.
Right.
I think the movement from dollar-based trade to more different currency-based trades plays into the Bitcoin narrative. And from that perspective, it's geopolitically important. But yeah, if a new war breaks out in some country, I don't think that's going to change Bitcoin very much.
Why did Gary Gensler approve the Bitcoin ETFs in January?
Because he lost a lawsuit.
Okay. What was your experience with going back and forth with the SEC trying to get them to approve it?
Yeah, pretty incredible. I mean, we did 33 meetings with the SEC.
Wow. And is this like you guys enter a boardroom and you're all just like having coffee? Like what is the meeting like?
Yeah, for a long time, pre-COVID, it was flying to Washington. I have my favorite hotel. I spent a lot of time there, and it was going in and presenting data, right? It's worth noting the SEC staff who does the first level review, right? And then the commission votes on it, but there's a whole career staff. Incredible people, incredibly smart, asking incredibly good questions. And the questions were fair, right? They were asking about market manipulation in the space. They were asking about fake volume in the space. We forget about it, but when we first filed for a Bitcoin ETF, about 95% of the volume printed in crypto was fake or fraudulent, right? The market was not really robust. So we had great engagement with the staff. Ultimately, that sort of froze up when Gensler came in, and it froze up until the lawsuit from Grayscale. But that lawsuit ultimately unlocked what came to be the approval, and now we have whatever $50 billion in assets in these ETFs.
So these meetings, these are, you would say, people in good faith trying to understand why Bitcoin should be in an ETF.
Yeah, absolutely right. I do think the SEC staff operates in really good faith and is asking really valid questions. I mean, I will go back to that first filing. Bitwise published the report that 95% of the volume was fake. At the time, if you went on coinmarketcap.com and looked at the exchanges, you would see all these exchanges that you never heard of, like Coinbene.
Yep.
Right? You couldn't find any employees. No one had ever been to the offices. You couldn't meet any human who had actually traded there. The market wasn't perfect. We can admit that in crypto. Today, It's different. So I do think they were asking good questions. I think there is the political layer at the commission level where politics enters into the question, and that's not ideal. But at the staff level, I really do think they've been doing a great job.
Okay, so today we got some pretty big news. The SEC has decided to approve the spot Ethereum ETFs. It looked like this wasn't going to happen, and then a couple days ago, Eric from Bloomberg, who does a great job reporting this stuff, he says, "Nope, it's happening." And today it happens 30 minutes before we get on the call. Do you have a tinfoil hat theory for why Gary Gensler approved it today, or what's going on here?
Yeah. So a few things just to make sure I'm in compliance. Obviously, I can't talk about any specific filing, including our filing, beyond the facts on the ground. And what actually happened today was the SEC approved the 19B4, which is the application to trade and list. There's still another step, which is the SEC needs to approve the S1 or prospectus that deals with the disclosures before they can launch. And we don't know how long that could take. Look, I think the data supports approval. So I think in the end, common sense won out. If you look at the reason the Bitcoin ETFs were approved or the 19B4s were approved, it's because we have Bitcoin futures ETFs and the price of Bitcoin tracks the futures price closely. So you can be confident in the market from a market manipulation perspective.
Right.
The same data is true in Ethereum, and that was called out in these approvals. And so in the end, common sense won out. It's hard to look at what happened in Washington this week. SAB 121, the CBTC vote, the FIT 21 vote, Democrats crossing the aisle to support crypto and not see a political narrative. Certainly a tinfoil hat would fit on my head. But in terms of what actually happened, I don't know for sure.
You guys potentially may offer this Ethereum spot ETF. In general, could you give me a 30-second bull case for why I should care about Ethereum?
Sure. I think when you look outside of monetary applications and you look at things like decentralized social networks or gaming or or maybe stablecoin issuance. I think those are interesting applications that don't fundamentally necessarily fit into the Bitcoin framework. Look, I think Bitcoin has a lock on being the monetary asset of crypto and on being the primary store of value. And I know that there are a lot of people who think that that should be like sort of the end all be all, and the things that happen on other assets are less interesting. That may be true, but I think there's some interesting applications being built on Ethereum outside of that core store of value market. And I therefore think it's an interesting asset, and an ETF would provide an easy way to gain exposure to it.
Do you think it brings more money to the entire crypto ecosystem if people can invest in ETH?
I think it brings more money to the crypto ecosystem, and I think it brings more credibility to the crypto ecosystem. I think traditional investors like to see diversified opportunities and like to know that, it wasn't just like a bolt from heaven. That there is a broader technology and broader use cases here. And, let's be honest, there's a lot of things wrong with modern technology that blockchains can fix outside of just money. At least that's my view. I know not everyone shares that, but that's how I see it.
Okay, last question on ETH. The SEC has argued for a long time that Ethereum is uniquely an unregistered security outside of Bitcoin. They just sent Robinhood a Wells notice saying, hey, you guys can't be allowing Ethereum on the platform. Now with this approval, if it fully goes through, do you think that argument about an unregistered security just doesn't make sense anymore?
Look, we've always been of the view that that argument didn't make sense to begin with, that Ethereum was sufficiently decentralized. The SEC director Hinman gave a famous speech, I think in 2019, about Ethereum having possibly started as a security, but moving into non-security status. I do think that if we see these ETFs launch, which again, they haven't launched, if we see them launch, I think that takes us another step towards putting Ethereum, over the line in a safe box. But not all pieces of it, right? These ETFs don't include staking. There's still lots of nuance. My broad expectation is that we're going to need to see a legislative solution to clarify this. I think FIT 21 started to deal with that, but that's sort of my broad understanding.
Okay, the business of ETFs. So my elementary understanding of it is you guys raise some money and you invest that money for your clients, and you take a small management fee to do the act of making it as easy for me to just buy Bitwise and get exposure. You're competing with the BlackRocks and the Fidelities of the world, obviously multi-trillion-dollar organizations with assets under management. What has it been like competing with those guys? And do you think of it as a competition in terms of you're going for the same assets, or do you think of it as a collaborative ecosystem?
It's a little bit of both. Like, it's a friendly competition. Look, I think BlackRock being in the space helps crypto because it brings a lot of credibility to the space. People are very familiar with the brand. Larry Fink going on CNBC and talking about Bitcoin elevates the space. It elevates it in Washington. I don't think you can overlook that. But we are competing for the same market. The history of ETFs, funnily enough, is that specialist providers do well in specialist areas of the market. For instance, in commodities, the largest player is US commodity funds, which is like 7 guys operating out of Oakland. And they came to the market at the same time as Deutsche Bank, and they won the market for crude oil ETFs. The reason for this is that professional investors want to work with a specialist who doesn't just care about the market when it's up, who cares about the market when it's up, when it's down, when it's sideways, that they can call and ask questions of no matter what's going on in the market. At Bitwise, 65 of us show up every day, and all we think about is crypto. And for many investors, they want someone who, wakes up thinking about Bitcoin, is thinking about it at lunch, is thinking about it at night, is thinking about it at 10 p.m. They want that kind of support. And so that's how we try to compete.
Why should someone buy BITB over IBIT?
Oh, well, a couple of reasons. One, it's cheaper. It's 20% cheaper, 20 basis points, not 25 basis points. And
in terms of your management fee, correct?
That's in terms of the management fee, the less you pay, the more you keep. 2, we support the Bitcoin ecosystem. So we donate 10% of our gross profits.
I saw that. This is really cool. Can you explain that? How do you guys do this?
Yeah, absolutely. So we take 10% of the gross profits of the ETF and we donate to Bitcoin open source developers. Wow. We do it through 3 foundations so that we aren't making a decision about which developers and what they're working on. We think the community should make that decision. but Brink, OpenSet and Human Rights Foundation, and we make that donation. It's our way of giving back to this ecosystem, which has made it possible for Bitwise to exist. So we're really proud of that. We're proud that we're, the only issuer, I believe, who publishes their Bitcoin address, so you can verify on chain that we have the Bitcoin we say we do. And then we back it with specialist crypto expertise. And that's expressed both in technical ways. How we trade, I think, is a little bit safer and more efficient than how others trade, as well as the fact that we'll answer the phone when you call.
So when you're talking to institutional guys and they're saying, hey, why should I pick you over Larry Fink? Is your argument just that you're cheaper?
No, it's really about the services and support. Many of the people who allocate, the professional folks who allocate to Bitcoin, they then receive questions. Their financial advisors and their clients ask them questions, or they're an institutional committee and the board asks them questions, and they want someone who can give them an expert answer, right? What is the halving? What does it mean for the market?
Right.
What is FIT 21?
Right.
How many people at BlackRock could describe the peculiarities of FIT 21 or SAB 121? And they want those answers instantly. So it's really about the service we provide. The lower cost, the Bitcoin donation, those are beneficial. It's really about that service angle.
Okay, Matt, last two questions for you. Thank you, everybody, for being here today. I'm going to put Matt's Twitter in the chat. Please make sure to follow him on Twitter. Thankfully, he was able to respond to my DM on Twitter, which is how we got this all started. So thank you, Matt, for being here. Why the hell has GBTC not reduced their fees and they let 300,000 Bitcoin get dumped over the past 6 months? Like, why is this happening? Because I don't know how to make sense of it. So maybe you can.
Well, I think if you multiply the fee by the AUM and see how many dollars they're making, you'll arrive at something that approximates the answer.
They didn't want to lose money. That's your point. They didn't want to lose money.
It's hard to once you get used to those high fees, it's hard to pivot, but it's opened the door for many of us. And look, Grayscale is a great company. They did a lot of work to get the Bitcoin ETFs approved. I won't imagine beyond that how they're making their decisions.
Yeah, it's been incredibly interesting because I have a bunch of friends and we're all in this ETF game. We're buying different ETFs, and it's just crazy to see that these guys kept having outflows, but the outflows seem to be stopping at least a little bit. Why should I buy Bitwise over a Bitcoin proxy like MicroStrategy? Obviously, the question is not literally about MicroStrategy, but proxy in a stock like Coinbase versus the ETF. Why is the ETF better?
Yeah, look, if you want to make a simple bet, which is a bet on Bitcoin, you want to strip away every complication that you can. You want to strip away leverage. You want to strip away human decision-making. You want to strip away premiums and discounts. You want to strip away custody risks. You want to strip away complications. The great thing about an ETF is it provides sort of institutional caliber exposure specifically to Bitcoin that you as an individual can buy on the same terms as the Harvard endowment. That's the beautiful thing about an ETF, right? Where else can you get exposure to Bitcoin with institutional custody and trading and audit and all those things for 20 basis points, like 0.20%? It's an incredible deal. The stocks, I love many crypto equities. We run a crypto equity ETF, BITQ.
Oh, wow. I didn't know that. I'm going to put that on the watch list, BITQ.
Yeah, BITQ. It's, it holds, your Coinbase, your Galaxy, your MicroStrategy, your Bitcoin miners.
It's up 73% year to date. It's not too bad.
It's had a good run. There you go. I think it's a great fund. And look, I think there are opportunities in crypto equities that you can't access directly through Bitcoin. But if you want exposure to Bitcoin, you should buy Bitcoin. And the ETF for many people is the easiest, cheapest, most secure way to do that. Not for everyone. There are other great ways to buy Bitcoin, but for many people, the ETF does the job.
I love it. Matt Hougan, thank you for being here. My final question to you. You're running a fund, $2 billion under management. I mean, are you having fun? Do you feel like you're just like the coolest guy on earth doing this every single day?
I don't know about the coolest guy, but I am having fun. I do sometimes step back and say, what an amazing opportunity to be sitting at an asset manager in this new and incredible asset class. It's a once in a lifetime thing. And I pinch myself. It's incredible.
And you get to talk to some of the coolest people on the planet and actually convince them to give you their capital and it's an amazing, amazing thing. It's an amazing story. You're an amazing resource to the Bitcoin community. Thank you, Matt, for being here. I really appreciate it.
Thank you for having me. This is fun.
Thank you. All right, everybody. We will see you guys in the next one. Thank you for being here. Good night.